And I still think silver's cheap. I think silver could easily be $100 next year. Do I think gold is going to be 8,000 next year? I mean, probably not. It could be. It could be. But I think if gold is 8,000 next year, silver will be more than 100. Silver might be 150.
So
At its peak, it was over 100 to 1. So you were able to get
108.
more than 100 ounces of silver for 1 ounce of gold. Now it's about 80 to 1. And that's still cheap silver.
Mm-hmm.
I think my minimum would be about 50 to 1. That would be a minimum. But I think there's
It
a
still
good
sounds
shot
high.
that we could go to 20 to 1.
Peter Schiff's discussion in this segment centers on his long-held warning that the U.S. is heading not merely toward another financial downturn like 2008, but a much larger dollar crisis. He says the problems that triggered the last crash were never fixed, only delayed through debt, money printing, and easy monetary policy, which means the eventual reckoning will be far worse. He recalls how he accurately predicted the 2008 collapse in his book Crash Proof, and notes that mainstream media and the Federal Reserve dismissed his warnings back then. He argues the same blindness exists today as gold flashes a new warning signal. Schiff points to the surge in gold prices as clear evidence that global confidence in the dollar is breaking down. Central banks, he says, are dumping dollars and buying gold, quietly repositioning themselves for the coming monetary reset. He cites former Fed Chair Alan Greenspan's view of gold as a policy barometer, where prices around $400 once signaled an overly loose Fed stance. With gold now near $4,000, Schiff says it screams that the Fed's policy is far too loose, yet the central bank still plans to cut rates, a move he believes will trigger a bond market crisis and a plunging dollar. Despite this backdrop, Schiff emphasizes that silver remains deeply undervalued. The current gold-to-silver ratio of around 80 to 1 is historically extreme. In a true bull market, he expects it to contract to 50 to 1 or even 20 to 1, implying a massive upside for silver. If gold were to reach $8,000, he argues silver could exceed $100 to $150 per ounce. Finally, he notes that gold's rally so far has been fueled mainly by central bank demand, since they can store gold but not silver. Retail investors, meanwhile, are only just beginning to enter the market. Schiff believes that once Wall Street and the broader public join the move, silver will outperform gold dramatically, marking the next major phase of the precious metals bull run.
But I actually think that we could have the crisis next year. And I'm not talking about the financial crisis, right? We had that in '08, and I totally predicted that crisis. I wrote about it in my book, Crash Proof. But what I was worried about was not that crisis, but the next one that hasn't come yet because we've kicked the can down the road, for all these years. But all that can kicking allowed all the problems to get much worse. And so now, when I was talking about $5,000 gold back then, I mean, $5,000 gold could be this year. I mean, very easily. But I mean, at a minimum now, probably we're looking at $20,000 gold because of all of the money that has been printed and all the money that's going to be printed. Which is why, people have to, look at what's happening and protect themselves. A lot of people, I think, are going to get wiped out in this dollar crisis, which I think gold is signaling a dollar crisis. Just like, when subprime blew up, and I was short that market, but when subprime blew up in '07, that signaled the financial crisis was coming in '08. Yet the mainstream media, the Federal Reserve, were oblivious to it. I remember those days when they still had me on, CNBC and Bloomberg and CNN and Fox, and I was warning about it. People were laughing it off, and even though there was a clear sign that it was coming. Well, what's happening now in gold? In fact, Scott Bessent, I was listening to him interviewed a couple hours ago, and he was asked if he's concerned about the price of gold going up. But he said, absolutely not. It means nothing. Who cares? Everything is great. It doesn't mean nothing. It means everything. It is the most important commodity in economics, in money. Gold is money. And the fact that central banks around the world have been selling their dollars and buying gold means something, right? This signal, even Alan Greenspan, Bessent talked about, how great Alan Greenspan was, and, which, I didn't think he did a good job. He caused the financial crisis. But one thing that Greenspan got right is he said that he uses gold as a barometer of whether or not his monetary policy is too easy or too tight. He said if gold gets close to 400, that means I'm too loose. And if it goes near 300, I'm too tight. Of course, at the time he said that, it was around 350. But, what does $4,000 gold tell you, or 4,200? The Fed is too loose, yet it's about to cut rates. So gold's going through the roof here. That means the dollar's going through the floor. We're going to have a bond crisis. And I still think silver's cheap. I think silver could easily be $100 next year. Do I think gold is going to be $8,000 next year? I mean, probably not. It could be. But I think if gold is $8,000 next year, silver will be more than 100. Silver might be 150. So, at its peak, it was over 100 to 1. So you were able to get more than 100 ounces of silver for 1 ounce of gold. Now it's about 80 to 1. And that's still cheap silver. Mm-hmm. I think my minimum would be about 50 to 1. That would be a minimum. But I think there's a good shot that we could go to 20 to 1. Maybe even a little lower.
Maybe 15. 15.
Yeah, I mean, look,
hit it before.
Whenever the peak of this bull market is, and I think we're still many, many years away from a peak, but wherever the peak is, that's when silver is going to be at its most expensive relative to gold, right? So it's going to happen. It's just a question of when. I think the main reason, and I've been saying this, that gold has been going up and not silver is because this rally has been driven by central banks. They don't buy silver. They don't have any place to store it. They buy gold. Exactly. The retail investor wasn't buying. That's just starting now, just now. Wall Street is now, for the first time in my career, right? I've been in the financial business for over 35 years.
In this segment of Peter Schiff's discussion, he weaves a narrative connecting financial markets, global economic shifts, and precious metals investing. He begins by highlighting the exceptional performance of gold, silver, and foreign stocks this year. While broad markets have surged, particularly dividend-paying foreign stocks, the real potential lies in junior mining stocks, which have underperformed so far but are heavily leveraged, setting up substantial gains when the next leg of the bull market arrives, likely in 2026. Schiff views this as a unique opportunity for investors willing to position themselves early. Schiff then broadens the lens to global economics, criticizing mainstream narratives and U.S. policy perspectives. He argues that trade deficits are misunderstood. The U.S. has been exploiting the world, not the other way around. He explains that China's economy is strengthening as it decouples from U.S. dependence and shifts toward trading with other global partners. This decoupling, along with de-dollarization, signals the end of America's ability to live beyond its means. The era of relying on endless dollar printing, consumer leverage, and import-driven consumption is coming to an end, and gold is already signaling this transition. He stresses that mainstream media and policymakers fail to grasp the significance of gold's rise, much like they ignored warning signs before the 2008 subprime crisis. Schiff warns that the dollar and bond market haven't collapsed yet, but they are on the brink. Despite rising gold and silver prices, public participation is muted. Many investors mistakenly think prices are too high or even sell their holdings. He underscores that central banks are accumulating gold, not selling it, contradicting some media narratives. Schiff concludes that this is not a speculative bubble but a structural realignment. Tangible assets like gold and silver are emerging as safeguards against systemic financial instability.
And meanwhile, they're missing out on what's going on in gold stocks. Foreign stocks are killing it. We're having our best year since I've been managing money. Even our basic strategies, our dividend-paying foreign stock strategy is almost up 50% on the year. And we still have a couple of months left. But of course, our biggest strategies are gold and mining stocks. And, there we've more than doubled.
Crushing it.
But, the big the small ones, the junior miners, like my gold fund has about a third in real small companies, juniors. And they haven't even moved that much this year. I think they're the story for 2026. but that's a great opportunity for people to get into my gold fund, which people could buy no load, any discount broker, EPGIX. Yeah, it's more than double this year, but that's nothing compared to, I think, what's going to happen when these smaller stocks that have underperformed this year, when they kick in, because there's so much leverage baked into those stocks. Well, the media doesn't understand it. I mean, they're not going to cover what they don't understand. We've been living in a bubble. Look, the Trump administration has it backwards. They think that the trade deficits mean that the world's been screwing us over. The reality is we've been screwing over the world. You hear Trump talk about, China's economy is going to be wrecked from this trade war. No, they're going to be liberated from the trade war. Liberation Day liberated the Chinese. It's the American economy that's going to get wrecked. The best thing that China can do is stop vendor financing the deadbeat American customer. And Chinese economy is actually strengthening quite a bit as they're trading less with America and more with the rest of the world. This decoupling is happening alongside the de-dollarization. And that means America's ride on the global gravy train is coming to an end. We're not going to be able to live beyond our means anymore. We just can't crank dollars off a printing press and then go on a shopping spree around the world and buy all kinds of stuff that we don't produce. We're not going to be able to get leveraged as consumers and borrow money and buy stuff that we can't afford. Those days are coming to an end. That's what gold is telling you. But the mainstream media, the Fed, they don't get it, right? Just like they didn't understand the problems in the mortgage market, even though subprime blew up, they don't understand the significance of what's happening in gold and what it means. Yes, the dollar relative to other fiat currencies hasn't collapsed yet, but it's about to. The bond market hasn't collapsed yet, but it's about to. Because when subprime crashed and everybody said, don't worry about it, it's just subprime, and I knew it was the tip of an iceberg. This is the tip of an even bigger iceberg when you see this happening to the price of gold and the price of silver. And, people are oblivious. People, they look at gold and they think, it's a bubble. No, nobody's invested. I got Schiff Gold as my gold company, and business has been slow for years. It's picked up a little bit in the last month or so, but it's nothing to write home about. It's not like the phones are ringing off the hook. I mean, it's not even near what it was during COVID. That was the best year I ever had in the gold business, was 2020, because people were actually worried and they rushed out to buy gold and silver. There is no real worry now. In fact, what we've found over the last year until very recently is people were reluctant to buy gold and silver because they thought the price was too high. And in fact, what was keeping us going was people were calling up to sell their gold and silver. They wanted to cash out, right? And now, of course, that I advise not to do that. I've been telling people, no, don't. The last thing you want to do is sell your gold and silver. I read this ridiculous article in the Financial Times where they said that central banks should take advantage of the gold bubble and sell their gold. I mean, they're the ones that are buying. They're the last thing they're going to do is sell.
Peter Schiff warns that the global financial system is on the brink of a major upheaval, far beyond the 2008 crisis. He highlights that gold and silver are sending early warning signals as decades of low interest rates, massive stimulus, and excessive borrowing have left the U.S. economy vulnerable. The dollar and bond markets, currently perceived as stable, are nearing collapse, while central banks are quietly shifting reserves into gold, signaling a loss of faith in paper currency. He emphasizes the gold-to-silver ratio, currently around 80-1, as historically stretched. Schiff predicts it could tighten to 50:1 or even 20:1 during a true precious metals bull market, positioning silver as potentially the most profitable trade of the decade. While gold has surged due to institutional buying, retail and junior miners are only beginning to participate, offering significant upside for patient investors. Schiff also contextualizes the issue globally. He argues that U.S. trade deficits have been misunderstood. The U.S. has been exploiting the world rather than the reverse. Meanwhile, China is decoupling from the U.S. and diversifying trade, strengthening its economy, while exposing America's over-reliance on debt and imported goods. This shift, combined with de-dollarization, marks the end of the era in which America could live beyond its means. Despite these warning signs, Schiff notes that public awareness remains low. Many investors are hesitant to buy gold or silver, some even selling, while mainstream media and policymakers fail to understand the gravity of the situation, reminiscent of the ignorance surrounding the 2008 financial crisis. He stresses that tangible assets like gold and silver are critical safeguards, and those who recognize the turning point early can capitalize on the coming structural shift from a credit-driven economy to a value-backed system. In short, Schiff frames this moment as not just another market cycle, but a major systemic turning point, where real assets, leverage, and global economic shifts will define winners and losers.